What's going on, everybody, and welcome back to the channel. In today's video, we're going to be talking about fair value gaps slash imbalances. It's been a really hot topic for the last 6 months to a year for day traders and understanding what the hell is a fair value gap, how can I use it to my advantage, how can I find it for entries, exits, profit targets, stop losses, and how do you trade this? Like, what does it mean? What's it for? How's it used? And everything in between, right? You might have seen me talk about it. You might have seen some other influencers talking about it. You might have seen people mention a name like ICT. And how do you trade fair value gaps? What is it about fair value gaps that you can use into your trading to make you profitable? To make it a somewhat hard concept simple, a fair value gap is simply a candle that has no other candles in between. So let me give you an example. A fair value gap is any candle on any time frame. You can go to any time frame. The gap is going to be anything between the two before and after candle. So you see this one candle here, this candle pushes up, and then the wick of the next candle starts here, and this wick starts here. This point in between is called a fair value gap. So if you take a rectangular tool, it's the easiest way to explain this. From here to here, and then you can drag it as far as it needs to be touched. This is called a fair value gap. FVG for short. Some people like to call imbalances, and the reason why they call it two imbalances is a fair value gap is literally an area that there's only buyers or only sellers. So it's an imbalance in the market. If we think about the markets, it's like a there's the financial markets in general. You want balances, buyers and sellers agreeing to a price. Boom, price becomes that. When you have an impulsive move, for example, you see here, this is not an impulsive move because price retraced to it. Okay, before and after is when you have kind of almost a disagreement in the price, right? A disagreement of the price, so it's an impulsive move that at some point it's come back and get retested, or that's the theory behind it. A fair value gap is giving you an area to look for, to either look for an entry, say the gap needs to come back down, get filled, and then continue a certain direction, or it needs to be retested for a rejection. You can see, for example, let's take this fair value gap in this case. You can see that it never came back to get retested. You see, guys, here the price got held. Price got held. It just kept going higher and higher and higher, and it wasn't until much later, was later in the day, pretty much in the afternoon, from this trade from 3:50 a.m. and this got tested at 10 a.m. because it wasn't in the afternoon, but it was about 7 hours later. Price came back to this fair value gap. And what did price do in this fair value gap? A lot of mistakes that beginners make is like they think as soon as the fair value gap gets touched, it needs to be respected and to give you a bounce or something like that. But the way you trade fair value gaps on all time frames, you wait for the candle to close. Whatever candle is going to test it, you're going to wait for it to close. You can see this candle flush right through that fair value gap. You see this? All these orders were here. Even when them been there, price flushed through it. This created now this fair value gap as a resistance spot. So you can see the resistance here for this fair value gap. If price had closed above this, it would have held as a support area. But because it didn't, it became a resistance area. Now, with price doing this, it gives you a signal that's like, hey, I can go short here. If you have other confluences to go short, that's an area you can go short to, right? And you can call this your fair value gaps can be used in different ways. This is one of the ways I actually prefer to use it. When you have a fair value gap, and rather than using it as a bounce spring, or you use it to flush through it, and now it becomes a resistance spot. I think this way has a lot more use to it than the typical way. So now this becomes your resistance spot as the fair value gap has been tapped into and flushed through with very much strength. And now you see that price had no other fair value gaps on this 5-minute time frame to retrace to. You can see here, you can see in this other example here, the fair value gap did bounce. And whenever you have two fair value gaps, a lot of times you can just go in a larger time frame, and then you find the bounce spot or the rejection spot. For example, now you can saw this time frame right here. We had 2 5 minutes together. I just jumped up to the 15. I could have just drawn it together. You can see price held up, candles closed into the fair value gap, and that could have been your long spot. So you can take a long off of this area technically, if you want to take a trade on, because you see that candle. Let me see, where's the long position? Why can't I find a long position? There you go. So you see fair value gap here. Came to fill it, you enter. Now this is where it gets tricky. You can use different as your stop loss, but for me, a candle closure outside of fair value gap will be a stop loss. So even if a candle wicks it still would have been for me, I would just hold my position. Right, so take account for that. And then you give you a pretty nice move here of about, if you were able to catch it from almost the bottom, 50 plus points, definitely taking profits. It did not, this ended up failing when it tapped into this, but regardless, pretty nice spot to take a win from. Now, as you can see in this 15-minute, you can even see clearly the rejection that we took for that 5-minute. So that's one of my favorite ways to use fair value gaps. A lot of people do use them simply for the bounce area. They're like, okay, I want to dip into fair value gap to bounce it into. I tend to really like using them as an area of rejection. Another area of rejection here, you see you get this fair value gap right here. But you also have a really, really tiny one right here as well on the 5-minute. I don't know if you guys can see it, but it's really, really small right here. That's another one that you might want to look at the larger time frames. You see on the 15, you see one here, and you see one here. You see we have two fair value gaps here. Now you go even further, 30 minutes. Okay, 30-minute fair value gap. There it was. And now it's clear, right? You can clearly see where it was. From bottom to top, it's right there. And what do you see? Price came up. Now with the 30 minutes, you have to be a little more careful. You have to use it as an area of like, hey, this is going to be an area of resistance, but I may not be able to use it as an area to enter simply because one, where do I put my stop loss, right? It's kind of going to be, it might be a wide area, especially in a 30-minute. If you're going to wait for the kind of closure, it could be a while. So in the 5-minute, you might have to look for an entry. For example, in the 5-minute, you understood this was the area when price came back to here that you rejected off of this and came back below the fair value gap that you had drawn out. Maybe then you enter, and then you can use this as your stop, and then your target would be, in this case, probably would be in this fair value up here, the lows, or maybe you could have new lows for the day, wherever you wanted to use. But that's how you have to use it, and you have to be really careful, because with the fair value gaps, I like to wait for the candle close. Now, you don't always have to wait for the candle close. If you do tap in, you have confluence with other areas. You could just enter right off the bat as soon as you tap into. My advice for that is maybe enter a small position size, and then add on to your position once you get a confirmation, just to play safe. Now, the way that I really like using fair value gaps is combining it with the Fibonacci tool, right? I'll give you an example. You could use fair value gap, and now you see this Fibonacci. You were on the opposite side of it in this case. As again, you flush through both the Fibonacci and the fair value gap as a confirmation of your rejection. I hope you understand this, but with the Fibonacci, you can just as well as use it as a resistance area if it fails, like you would a fair value gap. Another thing that's very important, combining fair value gaps with liquidity can be a very powerful tool, right? I'll give you an example. You see this low gets taken out on the 5-minute. We also had SMT divergence with ES, so ES held the new low when we made this. So you take out this liquidity, what do you form here? Strong move up forms a fair value gap. Now this fair value gap is even more powerful because you just took out liquidity. You can see price comes into, you can buy here, you can wait for the candle close by here, target the equal highs, you get the equal highs, boom. Taps into, and you see how this fair value gap now is much bigger. Look how big this is. That means there's a lot of orders there. That means it's more powerful versus this little one. That's why it's so easy to flush through and use this rejection. Also this one, what this one did not have. Right, the liquidity got taken out here. See, this is liquidity, then boom, next candle for up here, liquidity got taken out. Slow, little fair value gap, slow, and then boom, not as powerful. Right, and again, fair value gaps can also be used to the bearish side. I know we went over some bullish example, but the same can be used for the bearish side. Look for fair value gap as a point of either A, a bounce or rejection area, or B, an inverted area, like we saw here. Again, this one was a great example for me. As soon as this fair value gap, you close below it, I would have personally taken a short position, used that candle as my stop loss, or the fair value gap closure as a stop loss above it, right? So this is it. And guys, it's so important to wait for the candle closure. You guys understand that market makers know where the orders might be, and orders might spike above it, but it's all about where you close. See how here you close under it? and that's your stop loss. Especially looking at the overall trend, you knew that this looked like price had been consolidating for a while, right? Downtrend, downtrend, downtrend. As it consolidates for a while, then you're still following the overall major downtrend, and that could have been your trade. So remember, use it for bounce or rejection area, or use it as an inverted area, which can be even more powerful. Those are two simple ways that you can use for value gaps. Now people like to combine them with other confluences. I do as well. I show you guys liquidity, Fibonacci. People like to use order blocks and breaker blocks. Something I'm not really, it's not my field of play, but just find a way that you can find consistency with it. And you can use it all time frame. That's what's so powerful about it. I like to use them a lot of times on the 1 minute. I'll hop on the 1 minute, and as you can see here, in this 1 minute, price value gap, boom, boom, entered, follow the trend to the downside. I like to look for 1 minute fair value gap as an entry after the key area gets touched. So it's ahead of liquidity area, like I showed you guys, and then rather than entering just straight off the liquidity, I'll wait for a fair value gap to be created. In this case, let's say it wasn't, but here it was. That gets tapped into, and then you take it to the upside. You can use it in combination, test it out in different ways. Use it in combination with other confluences. Use it in combination with support resistance, wherever you want. Have fun with them. The more you trade, guys, the more you trade, the easier it gets to understand these concepts and look at them. It's a lot easier for me to just show you guys in hindsight. But if you can trade live with me every single day, you guys can ask me questions, how I'm looking at the fair value gaps, how I'm looking at whatever topic you might have a question of. So make sure you can trade live with me every single day. Link it down below, and peace.